Okay, recording this video on Thursday, the 19th of November 2020. It's just gone 5:51 a.m. Chicago time, just gone midday here in France. Do hope you are doing well. So that was quite a sell-off yesterday. We had a beautiful short trade that set up after the first couple of hours of trade. Ended up being a big one, 40 plus points. But I wonder if it is the beginning of something bigger. So I'm going to show you my daily charts on the equity indices. Also going to show you bonds and dollar index because they're all starting to line up potentially with a kind of coordinated signal there. But before doing that, I want to review the coffee trade because we took profits on long coffee yesterday. Ended up being a really nice one. It's taken a while to set up. I think I was talking about coffee 2 or 3 months ago and coming down to the $100 psychological level. But got into this trade almost 2 weeks ago and got out of it yesterday. Ended up being a beauty. So I'm going to review that chart for you just to show you what this setup looked like. The prices are a little bit different than on the previous coffee chart video that I did because we've rolled to the next contract. And with a continuous contract, the back history is adjusted. Last video I was talking about $100 being a super important psychological level. And I think with the new roll to the new coffee prices, this low down here is at 106, but I think it was closer to 102 or 103 with the old contract. Have to have a look at that. Anyway, this is the usual chart setup, 2 charts, left and right hand side. Right hand side is better sine wave and everything to do with price. Left hand side is better momentum and better pro-am and everything to do with volume. On the right hand side, below the price bars here, we have better sine wave calculating the cyclical activity in 3 different time frames. And then we use that cyclical activity to plot support and resistance levels on the price bars themselves, resistance white bars, supports red bars, and then breaks of support and resistance take us into trending moves and uptrends painted in red, downtrends painted in white. Left-hand side, better momentum down here below the price bars, which is a volume-based momentum indicator. And then we calculate the average trade size and plot blue and yellow bars. For blue bars are professional activity, yellow bars are amateur activity. And then when the 2 signals from the 2 different panes kind of line up together, where we've got uptrends in both price and volume, the background is painted red. When we have downtrends in both price and volume, the background's painted in gray. So this was the setup. Coffee had been it'd been batting backwards and forwards actually, kind of historically, between 100 and 130 bucks. But we had come back down this last downtrend that we had down here. We had a really nice little signal here. I talk about the end of trend signals rippling through the time frames. And we can see on his kind of a left shoulder here, we had a pullback to end of trend on the lowest time frame. Lowest time frame because it's the lightest kind of support and resistance lines here. We then ripple through the intermediate time frame here with this slightly bolder support and resistance line, pullback to end of trend. We do a final little flourish down here, kind of testing the lows, and then we set off into our uptrend. One of the signals that I particularly like is the second cyclical turn after an end of trend. End of trend doesn't mean we're just going to immediately go into a reversal. It just means that the trending activity has ended on the downside. And why I'm looking for the second cyclical turn after an end of trend is that it's playing out, the price is playing out, it's played out its trending activity, and then it's going through a little cycle activity. And potentially at that next point, we've got the start of a trend starting in the reversal direction. So we've got a little signal down here which is the second cyclical turn after the end of trend on this intermediate time frame. Here's another one here. This is the second cyclical turn after the end of trend on the lowest time frame. So pullback, end of trend, resistance, and then support. Second cyclical turn after that end of trend. But we're still in the downtrend because we've got to go complete to have our pullback to end of trend on the intermediate time frame. So then we go through another resistance to support support on that intermediate time frame, and that is when all of the trending activity has played itself out, and we've gone through some consolidation activity where we're just batting between a resistance and a support, and that's potentially the area that we can start setting up for a trending move in the opposite direction. And bingo, that's where it happened. Right here, we started moving off in the other direction, breaking above resistances here into an uptrend, and then we have a little bit of a test back down, and bang, we take off through 110. We get up into 122s up here. So on the volume side of things, we'd had our exhaustion volume down here and less selling going on. Would have liked to have seen an exhaustion sell here or here just to clear everybody out, but what we had is the reverse. We had an exhaustion buy signal, and this is getting the move going. So you look at that as the explosive volume that we need in order to kind of reverse a market and kind of move it in the other direction. And we also had a really nice little blue professional bar here come in just as that signal was kind of starting off, showing the professionals are buying that breakout. We test back down towards the low of that blue professional bar, and it holds, and then we kind of break into an uptrend. Now, part of this professional activity that we see here is a little bit of a gathering pattern at 112, which is professionals buying everything in expectation of the breakout here. So you can see the first 3 or 4, maybe 5 kind of bars of that being blue professional bars kind of buying that breakout. Don't particularly like it when there are a whole bunch in a row like that. It means a lot of volume's kind of gone through there in professional hands. And so I got out 122 up here when we saw blue professional bars, and the volume started to weaken quite significantly there. The volume kind of patterns coming down to close to 0. And I think what we're going to do is we're just going to kind of test back down, come back into the top of that range where those blue professional bars kind of bought that breakout. And so that's why I've kind of taken profits on here, because on the price side of things, we've broken above resistance on the lowest and intermediate time frame, but we've not put in a pullback to end of trend signals, and we'd expect those on both the intermediate and the lowest time frame. So I think there's going to be another opportunity to get back into coffee. We'll see it when it kind of tests back down into this 14 to 18 kind of region, what happens at that point. If we get a little bit of a sell-off and a blue professional bar kind of pops up at this point, when we get a cyclical support coming in, then that'll be good for another trade to the upside. But that was a nice little trade. I don't think it's all done on the upside. I think we've got to go see an exhaustion buy pattern to finish things off. But we're in the beginning of an uptrend of coffee, and it was just a nice place to kind of take profits at this point. So that was coffee. Yesterday, we had a big sell-off short trade that kind of lined up after some batting backwards and forwards at the beginning of the day. And I just want to show you that. So this is beginning of the day, this vertical line, 8:30 in the morning on the E-mini 500 tip bar chart with the multiple time frame indicators on. And we spent the first half of the morning up till 11 a.m. just going nowhere, backwards and forwards. It was a pretty tight range, maybe 10 points or so, which these days is a tight range. Years ago, several years ago, 10 points was a decent kind of range, but not with the volatility that we've had all of this year. But the professionals were just setting up for this kind of downtrend going on. I always say the market cannot reverse until we've had exhaustion buying or selling during the full liquidity of the day, during the day session. Yes, we had, the top was marked up at 36.20 up here with exhaustion buy pre-open, but we need the professionals to be kind of working during the day, and they need to see that exhaustion pattern during the day session. So we kind of sold off and we bounced off some flush patterns here, and we started to have exhaustion sell patterns here at about 10 a.m. getting this move going, but we had not seen exhaustion buy during the day session, and that actually came after 11 a.m. The professionals kind of held it here at 10, pushed it back up, got that exhaustion pattern, and then it reversed, and as soon as we got through 36.10 again, bang, we broke into a really big kind of downtrend. Interpretation of the blue professional bars during the day, this is what I see. At the beginning of the day, we're going to see a lot of blue professional bars kind of coming. That's natural. We always see that. Directionally, I think it's quite difficult to understand what's going on there. But you can see them here just after the open. They stepped in down here at this little low and pushed it back up. And we had some blue professional bars here that pushed it up here up to close to 15. But then at that point, they just sold it down. Bang. Took a whole bunch of positions going short at this point here. But then they were greedy. They wanted even more. So they stepped back in at 5 at this level here. Blue professional bars kind of come in and they push it back up slowly. They hold it at that point, and then we get a whole bunch of, for example, here Rambo patterns. These are amateurs, being pushed out of positions up here, pushed into getting long at this point, expecting a break above the highs. It does break a little bit, just a point or two above, but again, up at this high here, just like this one, they sold it down, bang, again, and they caught it again at 10. Down here, the blue professional bars kind of came in again at 10, and they forced it up here. This whole area here, they were just getting short, and picking up all of those kind of just normal kind of volume type bars. I see this activity quite a lot. It's like when they force the market down and then force it back up. This is like a killing fields to me. It's where they've done their best to hold it and reverse people out of positions, and they're using their volume here to kind of to hold the market and then to get short during this killing fields kind of area here. And we know it's killing fields because eventually we go through these lows. So same thing here. They force it down, force it back up. Go short but force it back up, and then during this period here they're kind of getting short because we go through the lows of those blue professional bars. So that was the setup for this short kind of trade, and it ended up being great. Was not finished on the downside until we saw blue professional bars kind of coming in. Down here at this point, we have Rambo patterns and amateur bars down here. No blue professional bars to hold us at that point. They come in here on the retrace. As soon as we retrace up to 3600, bang, they come in again. They didn't come in on this leg here. They come on the retrace back here. Same thing here. This was the first place that we actually had blue professional bars coming on the downside. Everywhere else they'd come in on the highs up here. That's the first point at 75 and above. And then I was out at 70, 71, kind of down here. Went a little bit further after that, but I was very happy with that trade. Better sine wave. Here we go. It's kind of getting us short. We had resistance, break into a downtrend, confirmed downtrend. That's that little retrace that we had, but we had no blue professional bars to show us that they'd bought those lows. And then so we had confirmed downtrend with a grey background, and then bang, 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 just continued on to the lows for the day. It was a range day, so range days, the highest probability trade is that we're going to end on the lows. Actually gone long this morning, 52.75, so that's looking good for me at the moment. We had a bit of reversal here. You can see this lining up, pull back to end of trend, pull back to end of trend, whole bunch of supports kind of holding at this point. So we've broken into a little bit of an uptrend. I'm just going to check out what we're doing here. The exhaustion buying, bullish divergence. Anyway, so that was yesterday's kind of range trade, which ended up being good. But what I'm saying is potentially that weakness that we saw yesterday, Wednesday, could be the start of something bigger. And I'm just going to show you that on my daily charts for the indices and bonds and dollar index. So exactly the same chart set up with the tick bar charts versus the daily charts. This is the S&P 500 index, and this is what I'm focusing on right now. This signal that came up, it's the same signal. It's the second cyclical turn after an end of trend. So we had the sell-off from the beginning of the year, March, April. We bottomed down here, and we've rocketed back up to test through the highs. And we've found resistance on the highest time frame. And then we put in a little pullback to end of trend on the lowest time frame, and this is 1, 2 cyclical turns after that end of trend. So we've played out the kind of the trending energy. We've gone through some consolidation energy up here, and it's all happening at cyclical resistance on the highest time frame. So watch out. Downtrends, though, don't happen until we have broken supports. So all we're seeing here is like a local high that we might have some trouble getting through. Let's wait and see over the next few days. And it's not broken into a downtrend yet because we have to go through pullback end of trend. Plus, we'll talk about the NASDAQ chart because that shows us the intermediate time frame here. But all of the S&P 500 charts are looking the same. So that's the index itself. This is the E-mini day and night session. There's that point, second cyclical turn after end of trend. And SPY, so the ETF covering the S&P 500, same thing, second cyclical turn after end of trend. So I was kind of expecting a little bit of weakness yesterday because that pattern had kind of popped up on a couple of the different index charts. However, the picture on the NASDAQ is very different. The NASDAQ has been this year the strongest of the lot. It's weakened a little bit versus the Russell over the last couple of weeks, but What I'm showing you here is that we're through resistance on the intermediate time frame as well on the NASDAQ. So the highest probability is that we have to put in a pullback to end of trend on the intermediate time frame on the NASDAQ. So we've got to come back into that support wherever that level is going to be. It's going to be where we have these intermediate lines kind of cross on the high, on the fast and the slow, and I can just see them at the moment here. You can just bump that out. They are parallel at the moment, so we need those to come back together, come back down to the lows, and kind of find an intermediate time frame support level. So the trend is still strong on the NASDAQ. It's resistance on the S&P 500 on the highest time frame, but we're still on an uptrend on the NASDAQ. We could find a left shoulder here, though, at this point here, have a sell-off, find that intermediate level support, and test back into those highs. So the NASDAQ is stronger. And then if you start to back it down to like the 135 minute and the 45 minute chart, you can see that we're this last push back up into 3600. We gapped it up a few days ago here, and big blue professional down bar, kind of just taking profits and selling that down, and all the activity testing back up to the range. We talk about these big blue professional bars where we test the ranges of those big bars. We've come back up to test the range of that, and it was all amateur patterns, amateur up bars into that 3600 level. So that's very weak. That's amateurs buying, expecting this thing to continue forever. And no, with yesterday's activity, we got kind of hit hard, pretty hard on the downside. And then the 15-minute chart, same thing. We had blue professional bars at the highs here. They caught the low, forced it back up, and then those are amateur bars showing the weakness buying into those highs. And this again is kind of a killing fields kind of area. We get through 3506, bang, we're into something bigger on the downside here, and you can start to see these patterns kind of coming together. So that's the daily charts on the indices, and we've got this kind of consolidation area that we've kind of ranged through over the last couple of weeks, and it could be coming to a close. So let's see if we get some breaks of support. What's interesting is looking at the dollar index and the US bonds, which kind of flip side trades. And on bonds, this is at US, which is the 30-year bond chart. We're coming in daily again. We're coming into support on the highest time frame. So, we've not broken into an uptrend at this point here, but that cyclical support on this daily chart is pretty important. So maybe we could go through a pullback to end of trend cycle on bonds. So bonds are strong as people kind of panic out of maybe or readjust their portfolios out of equities. And then the dollar index chart, we've not seen a blue professional bar on the dollar index daily chart for months and months, and we got it a couple of days ago. Down here, bang, 3-4 days ago. Kind of came in here just as we're starting to see some strength on better sine wave. We've got cyclical support going on here. This is actually going to be a second cyclical turn after end of trend on this time frame. So you can see we had end of trend on the lowest time frame came in. We had pullback to end of trend, and then we had resistance and support, and that is in due today. So let's wait and see. So again, dollar index tends to strengthen when people kind of panicked out of equities. Bonds will strengthen when people have panicked out of equities. Japanese yen as well. Japanese yen's been pretty strong. We didn't do too well over the last couple of days, but potentially it's kind of going to go through a bit of a strengthening kind of period. So we've got all those three things kind of coming together. We've got bonds, dollar index, and equities potentially looking at a turning point on all of those charts. So for me, that's looking quite interesting with things kind of lining up between the equities charts, the bond chart, dollar index chart, and so on. So, yep, just going to trade my signals, but keep my wits about me.